Hi everyone, today let's talk about the Bank of Japan raising interest rates and the potential effects on the global economy. And then on the flip side of that, we'll talk about the ECB cutting interest rates heading back towards that neutral zone. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So starting with the Bank of Japan, they did hike to 0.5%. They are a long way behind the rest of the world when it comes to interest rates. We hiked all the way up into the 5% range, a little bit over 5%, and they're sitting at 0.5%. In terms of GDP numbers, you can see real numbers year over year for 24, 0.5%. 0.6, 0.6, 25 looks a little better at 1.1, and then for 26 at 1%. CPI numbers, 2.7, 2.4, interesting to see those numbers. Obviously much lower than what we've been seeing. Rising inflation showing 3.6% year over year, so their inflation is lower than ours. This is kind of the upswing for them. They're a little bit behind on what we're seeing, but this does have a huge impact because they are a very large economy, and this is where we've basically been borrowing currency from. We did see a huge delevering from this trade as they start to raise interest rates, but now they are starting to see inflation and stronger economic growth, a higher CPI number, PMI also above that 50 line, so showing robust economic activity, and they are looking to raise it to 0.75 and potentially 1% by mid-26. So they are actually in a hiking cycle. So cheap money around the world. This is where it was coming from, and now that is kind of being squeezed out at least a little bit. On the contrary to that, you have the ECB cutting interest rates along with the United States. They've been ticking down, as you can see there, and they are expected to do another rate cut next week as part of the growing consensus among policymakers. Right now, they're around 3%, and they're expecting to decline to their neutral range between 1.75 and 2.25, stable range being 2% for them. So gradual cutting path of 25 basis points down to that 2% range. And this could actually spur growth a little bit potentially as asset values start to go a little bit higher, as borrowing potentially starts to step back up a little bit with cheaper credit. And then you have things like real estate, utilities, bonds also going to go a little bit higher as interest rates start to go down, which is honestly what I'm looking for in the United States. That's why I've been buying bonds, why I've been buying real estate. Not so much utilities, but I do think those are the opportunities in markets right now, as the US is basically mirroring the ECB cutting cycle, as they mentioned here, participating in that broader easing cycle. Looking at fear and greed, we finished the week at a 49, up from a 37. So we did get a pretty strong rally on the week, despite the end of the week being kind of choppy. Interesting to see that, but you can see this kind of spike out of this consolidation here. Now we're into that turning point area where you can get into here, start to see a little bit of hesitation, maybe a little bit of a pullback before a continuation, or you can see it here where we did rally up into the 60s and then pulled back down into the 30s. So understand that's kind of the range that we're in. It's kind of a pivot point. Usually once you've gotten into these extreme levels lower, momentum's at neutral. Strength, still extreme fear. This got really oversold, and it's taking a long time to get out of that extreme fear area. Breadth has continued to rally. We'll take a look at those later, of course. Put call ratio pulling back into extreme greed. So this is a major indicator for me. I think this is part of why we're seeing markets hesitate at this level. There's just too much bullishness in the markets in the short term. I think we're going to see at least a little bit of a pullback. Volatility also neutralized, also hovering at a level right there in that 14.7 area. We've been watching that for a while. Safe haven demand, interesting to see that. Bonds are starting to outperform a little bit, while equities have either hovered or pulled back slightly. And then J&K just continues to not move very much. Moving over to the AAII survey, look at this surge that we got here today, up to a 43 from a 25, absolutely massive. Basically to those peak levels, just about as high as it goes in the shorter time frames. It can get into the 50s, but not super often, and definitely not in 1 week from a 25. So huge swing to bullish. I think this is why markets are hesitating. There's just about as much bullishness as there can be. The bears pretty much in line with historical averages, but the neutral section definitely getting squeezed. And the bigger note, like I said, is the swing that we got from the previous number. Huge swing. Moving over to seasonality, you can see seasonality is still bullish up through the end of this week, 27 through 30. You do see a slight decline on that last day there. to round out the month, but not a whole lot, like 0.25% or so. I'm curious to see if we've already kind of touched this peak and we're seeing a little bit of consolidation a little bit earlier here. You can see there is a little bit of sideways in the end of last week, which is what we were seeing, slight declines into the Monday, which is the expectation based on this Russell chart here, but that says a little bit higher to go and then they kind of sell into the last 2 to 3 days potentially. So a little bit of mixed signals, relatively flat here from the end of this week through the end of the month, but it can get a little choppy between that period. And then looking at the calendar here just for a moment, you can see bullish for the Monday, bullish indicator off of new home sales, potentially consumer confidence, durable goods there for the Tuesday. FOMC Wednesday, obviously that is going to be a huge indicator. Everyone is expecting a pause, and I do think that's what's going to happen, but it could be interesting. And then Q4 GDP numbers, that can be interesting for markets as well, and then PCE rounding out the week. Chicago PMI also interesting, but FOMC obviously is going to be the big one. Moving over to earnings for this week, AT&T starting off the week, pretty much nothing else that day. Boeing here for the Tuesday, Starbucks definitely going to be interesting. Chubb, they're in the Berkshire portfolio, they got a big swing on that. It'll be interesting to see how they're performing. Royal Caribbean also in the mix. Invesco, always fun just because of the options trading, and then we start to get into the heavy hitters. Wednesday is going to be wild this week, so we got Microsoft, Meta, Tesla, ASML, T-Mobile, IBM, General Dynamics, Waste Management, the NASDAQ, of course, always fun. And then for the Thursday, it does not slow down. Apple, Amazon, MasterCard, Thermo Fisher, Caterpillar, Comcast, UPS, always interesting to see how they're doing as kind of a bellwether for markets. Intel, Altria, absolutely massive amounts of big earnings this week. United Airlines, want to see how the airlines finish up there. And then for the Friday, we get into those kind of staples and oil and gas companies, ExxonMobil, AbbVie, Chevron, want to see how they're doing. Colgate, Palmolive, always interesting on the staples. And then Church & Dwight there for you dividend investors. So overall, massive week here for earnings. Wednesday, Thursday, going to be big ones. And before we get into the calendars here, let's take a quick look at the Fed futures. Nearly 100% chance that we are going to get a pause. It was a little bit higher, but basically 100%. Very unlikely that's going to shift before the Wednesday. So pause priced into markets, in my opinion. It'll be interesting to see what comments they say for the rest of the year. How much are they going to cut this year? And then looking at March, still a pause. Again, that'll fluctuate based on what their comments say, but I would guess we're still going to see pause there. And then once we start getting out to May, it's a little bit closer between a pause and everything else, just about 50-50 if you include these two together here. I don't think we're going to get 50 basis points, so I would lump this 7 in with the one cut here of 25 basis points, so just about even between those two for May. And then between June and May, highly likely we're still going to see that one cut. So either May or June, one cut. And then as we get a little bit further out, there's a little bit more potential here for that second cut. Realistically, I don't think it's going to happen until we get into September. So one cut prior to September, and then I think September is most likely that second cut at this point. Obviously, this is going to fluctuate, like I said, with comments, but for now, pause. Not expecting a whole lot of fluctuation actually with this FOMC, but there's always some volatility. Looking at the economic calendar here, just quickly, you can see Monday, new home sales, 2- and 5-year note auctions, fairly interesting. And then for the Tuesday, durable goods, 7-year note auction, consumer confidence. Wednesday, FOMC, nothing else is super relevant. You do have an ECB conference, but not expecting much out of that. Thursday, GDP for the Eurozone, core PCE prices, GDP could be a little bit interesting. Want to see that come out fairly well for Q4. Initial jobless claims, jobs market continues to be interesting. Fed balance sheet rolling off pretty substantially and has been doing so for a long time. Markets really haven't cared about that, but I wonder how much lower that can go before markets start to care at least a little bit. And then the PCE data, like we mentioned, Chicago PMI, really nothing major besides that FOMC. GDP could be interesting, but I wouldn't expect it to be too crazy. Moving over to the max pain numbers, you can see it is still bearish all week, all the way through 7 days out. At 10 days, it's basically flat. That's interesting. And it is relatively flat early in the week, down just 1/3 of a percent, 0.5% here, up until the 31st, where it's down 2.6%. That'll be interesting. This hasn't mattered too much to markets here recently, but I do expect this to matter a little bit more this week. So we'll see how it plays out. 2.5% is the expectation for the Friday. And then looking at the charts for max pain, you can see definitely a ton of puts here. So very big put walls at 590, 4.98. I think that's one of the highest put call ratios I've seen in a very, very long time. So the problem with that is that usually when the put call ratio is this high and these huge put walls exist, markets just cannot go any lower. There's so many puts in the market holding up markets and they just can't seem to get lower. But we'll see how it plays out. Right now, stock price 607.50, max pain 597, so looking for that down move there. The first put walls really start to come in around 595. You could see a move potentially to there, but absolutely not lower than that 590 in my opinion. So just keep that in mind. You have a huge put wall there, and I do expect that to hold up markets. Total options is fairly high for a non-options expiration week, so 2 million, definitely enough to hold up markets in my opinion. Then moving over here to the charts, starting off with the S&Ps on the weekly chart, this is just an absolutely massive move higher. It just continues to go straight up over the last several years at this point. October of 22 was the low back here around 35.73, and since then we've rallied all the way to 6,000, and now we are starting to see a little bit of hesitation. Finally seeing a little bit of hesitation. We've had pullbacks here and there, but this finally looks like a little bit more of a topping pattern, right? So you have a high, we pulled right back to that high, and we stopped right at the level here. Momentum says maybe. You can see momentum step to bullish, 2 weeks in a row. Looking at the SMA here, this has been very slowly downtrending, losing strength. You have another lower low, many divergences here, lower lows and lower highs on the RSI, and we are in it one more time at this peak. So same price action, lower RSI. Is it going to reject off that SMA? I think you could absolutely make a decent case that it could. If it doesn't, then you're pushing to the trend here. Let's go ahead and extend that out just a little bit right there. So if it doesn't, your trend resistance is going to be at 61.61. Wouldn't shock me to see maybe a touch of that and then a little bit of a pullback here. And if it does pull back, your trend support in the short term is going to be at 6,056 or so. And then if it breaks that structure, there's quite a bit of room to the downside, all the way down to 59.26. I don't think we're going to go that far to the downside, at least in the short term, but for now, a little bit of a continuation, hit the trend, and then I would expect at least a little rejection from there. And then looking at it a little closer here on the daily chart, you can see this was the previous high. We are right at that level, 607.03, right there, holding some support. It was bearish on the Friday. If it dips below that and we start to see pullbacks, this is kind of what I'm looking for, back into this 593 area. I think we're probably going to see a little bit of a bounce from there, and then we'll start to see either a lower high, if it's going to continue the breakdown, or it's going to kind of push through this zone to a higher high. So looking to see what happens. Either way, short-term pullback into this zone over the next couple days is what I'm looking for. On the short time frame, that's about 2.25%. We'll see if it holds that or not. RSI says it should pull back, hit the SMA, hit on the RSI, give us a higher low setup in here, and then a continuation higher. But of course, price action is king, waiting to see what happens. Moving over to the Tasty charts here, you can see up weak, almost to that second ATR band right now. That's 615.50 as your resistance, pretty much in line with what we talked about. So if we got just a little bit more push to that upper trend line here, then we would expect to see a touch of that level. Remember, we did get a huge volume down spike back on December 16th, and since then we had been pulling back pretty decently until the last 2 weeks. I'm expecting a double top, so we'll see if that comes to fruition or not. Looks kind of similar to the setup here where we had a big dip, rally through. It did pull back slightly. We had one down week, and then we kind of grinded higher for the next couple months. So it's also a possibility. The trend still very much is bullish on the weekly chart. So, and in the short term, that structure is not going to change in 1 week. But if we do see this double top formation kind of culminating here for a little bit, that is going to change the minds of investors, in my opinion. We haven't seen a full topping pattern yet over the past couple years like we talked about, but certainly a possibility here. And then looking at that daily chart, you can see we did get into bullish conditions just barely there on the Thursday session, took out that trailing stop. You're in bullish conditions here. And then we pulled back right to that level. You can see the ATR trailing stop was 607.94 and current price 607.97. So at that, almost to the penny, waiting to see if it rejects from here. Is this going to be a stop run and then a reversal? I do think that that is absolutely a possibility. Remember, it is bullish conditions, so you would expect the higher low setup in here, somewhere between 592 and 597, and then we would expect a higher high potentially from there. So we'll see. Right now, mixed signals on the charts, which means probably some more sideways consolidation. Moving over to the NASDAQ chart, similar thesis, obviously running up over the last couple years. This week was slightly positive at 1.5%, so pretty good move there. We talked about how this broke the trend last week, and then it did continue higher from that trend. It pulled back to it slightly and then continued higher, holding that 90 MA at 21,387. The low of the week was 21,379, so we touched that level and then rallied back up after gapping up slightly. Based on this, your trend resistance would be up here around 22,695. Certainly a possibility we push through to that level. Momentum on this did step up just slightly, but not a lot. You can see we didn't dip down too much. Slight step there towards that zero line. Kind of looks like a culmination style move. Not one of these bigger swings where you get a big acceleration higher, big acceleration lower. Now you can kind of see this is like a spring that's losing its momentum. It's kind of stagnating in here. So we'll see. We'll see if it can continue higher into that zone, if we're going to get a push through this all-time high. Right now, it does look like a high, lower high setup. At the RSI, we are just barely above the SMA. It's been chopping kind of in this neutral range here, slightly above the 50, but not near those overbought conditions. You can see the huge volume here on the selling action. I still think that that is going to matter. That was on the week of the 16th. And then you can see it here on the daily chart. Retested this zone, came up here, rallied up, consolidation. The Friday was down about 0.5%. Momentum continuing to fade. We talked about it on the Friday video. And then looking at that daily chart here on the Qs, 3 days consolidation, basically flat during that time. 530.08 was the level. We did close below it. On the Friday, we're right at the trend, held the trend on a closing basis, waiting to see if this pulls back to 526.50. Again, if it has that same thesis we talked about on the SPY charts, that would take you 2.33% lower into this kind of range here. Then I would expect a higher low off of that, just based on this structure here with this kind of bull flag, longer term bull flag. Breakout here, I want to see the retest of this zone. It might even come back all the way and retest the trend in here. That would be interesting, all the way down at 510. If it holds the retest, then you would expect that continuation higher. But in the short term, in my opinion, movement to the downside is likely. Moving over to the Tasty charts, really no change to the thesis based on the weekly. Didn't quite hit that upper band, again, showing a little bit of exhaustion on this up move. You can see we hit it here, hit it the previous time before that, and then we missed it on this run up here. Pulled back. Now we're going to see if we get to that zone again, or if this is sideways consolidation before a sell. Certainly a potential setup right now. Hasn't gone either direction to verify. And then looking at that daily chart, you can see the NASDAQ is still in bearish conditions. Your trailing stop there is at 536.68, pretty much in line with your all-time high. We did kind of step down just slightly on this down move here, but you can see the ATR bands on the daily, sideways consolidative, basically flat. They are pinching in a little bit just because we're losing some volatility. You can see the volume for the week did come on the 17th. And you can see this volume spike here on the Friday. Definitely some buying action in here, and then got the continuation higher to here. Want to see some volume come through. My guess is we probably won't see that volume until we get the FOMC day, but either way, maybe some sideways consolidation, FOMC catalyst, push down into that zone that we talked about, and then we'll either get the higher low or it's going to sell all the way down into the 490s potentially. That is the low of this trading range, in my opinion. Moving over to the Russell here on the weekly, up about 1.4%. Momentum stepping to bullish slightly, still below the SMA here on the RSI. Might see a little bit more follow through, touch on that, and then I would expect a little bit of rejection here. Like I talked about on the Friday video, I took my bullish positions off. We had a strong week the previous week, continued higher here, could not get above 229.18, tested it multiple times. You also have VWAP there at 228.89, still could not get above that level either. So critical resistance, if we get above it and hold that level, absolutely could re-put on those positions and look for continuation higher, but for right now, doesn't look super great. Might see a little bit of a topping formation there. The trend medium term, you can make an argument that it is bullish, but this is technically a low, lower low in here. So based on this, you would expect a high, lower high potentially, and then a continuation lower back to this trend in here around 212. Personally, I think there's just going to be a better opportunity to get into this stock, in my opinion. We'll see what happens this next week. Maybe we overthrow, hit the trend in here around 231 or so, and then reverse. Either way, I'm expecting some rejection from this area. Market seems to be concerned with this price action that we've seen over the last week. And you can see what I was talking about here on that daily chart. Got the 55 EMA, that was your resistance at 230.20, touched it 4 days in a row, rejected from there, and then we closed below the 229, showing bearishness on the Friday. Step down on the momentum. RSI, again, similar thesis. Pullback, higher low setup potentially, continuation from there. Either way, the short-term move looks exhausted to me. Then moving over to the Tasty charts here on the weekly, you can see we're pretty much in the middle of the range. We are above all the EMAs and SMAs, so that's a bullish indicator on the weekly. Your resistance here would be that first band at 235. Certainly a possibility. We just got kind of a hesitation here. We get some continuation to that level. It's not impossible. Still bullish conditions on the weekly chart, so you could still make the case for a potential bullish push on this next week. It's not impossible, but like I said, you could absolutely put the positions back on if you get that 229 break. Right now, the daily chart still says bearish conditions, and your trailing stop here is going to be 232.50. I could absolutely see this rally up, touch the level, get the rejection from that level, get that higher low setup, potentially even as low as that 144 EMA down in the 221 area right in here, back in this low consolidation, hold that level, higher low off of this setup here, and then look for that bigger push into the 235 area. It's a potential scenario, but you can absolutely see why markets are a little bit bearish here in the short term. With that resistance here, you can see this is a key level. It was an important level back here through December as your support, and then as soon as that level broke, big continuation lower. Now we are retesting that level, 229, continuing to see it hold as resistance. And like I said, I think it's likely to hold as resistance in the short term. Moving over to the Dow did have a good week as well, 2.16%, momentum continuing to step here, but again, retesting the SMA on the RSI, this looks bearish on that weekly chart. Critical zone here, waiting to see if this is going to be the indicator that markets respect. We're at the level 445.16. That was the low of this kind of consolidation range here, the 2 December week. Touch that level, markets respected it. We'll see. Momentum still says this could break through, and if it does, you're looking for a bigger push to that 460 area. Certainly a possibility as well. But in the short term, similar to everything else, daily chart came into this key level, showed rejection on that Thursday, and then into the Friday, a little bit of selling. So critical zone, waiting to see what happens. If this level breaks, you're looking for the all-time high back at that 450 area. Moving over to the equal-weighted S&Ps, again, showing a lower high setup. Key level 182.22. Closed right at that level, almost to the penny. That was the low here from the 9 December week. Candle break continuation here lower. We since bottomed out, rallied up, retesting that level here. If you get the lower high, then you're expecting a lower low off of that structure, and then you can kind of see this grinding price action down and to the right, potentially, and then you're seeing the same setup here. SMA trending lower, looking for the retest, continuation lower, could be interesting there. So really no changes on the equal weights. The Russell and the Dow all showing a very similar picture. Potential for that either double top like on the S&Ps or the lower high setup. Then moving over to the ratios here, starting with the SPY Russell Nasdaq SPY. It seems like the SPY has been the top performer. You can see it was beating the Russell here. It was also beating the Nasdaq here. So everything says the SPY should be the best place to be in the short term. Still seeing this kind of bearish momentum on the Nasdaq. If this breaks this 355 level, that's going to be terrible. Momentum continues to fade here. You have the RSI SMA as support. If it holds a higher low here, maybe the Nasdaq does start to outperform a little bit. You can see why this might look like a bull flag type setup. Haven't seen any kind of moves off of that yet. And then looking at the SPY Russell here, this does still look to me like a topping pattern at the 266 level. We've been watching that level for a while. This is not as high as the ratio has ever gone. You can see back here during the dot-com period, this ratio went much, much higher. So critical level here, markets are continuing to respect 266, touched it last week. Could not even get to that level this week. So SPY still looks okay, but maybe the small caps could outperform a little bit this week. And then looking at the SPY divided by the M2 money supply, very much a bubble here. We've been talking about it for months at this point. Absolutely a bubble in my opinion. We're at the critical level once again. We almost touched it. 2850 is the key level here. Over through the trend, almost touched the level, over through the all-time high here. Momentum still stepping to bullish. RSI just barely above the SMA, but continuing to show that weakness on strength. See how it plays out. Is this finally the double top? Possibly. There's still a fair amount of momentum from that 13th into the week of the 21st, so maybe we overthrow it a little bit. Maybe we hit this trend in here. 2871 would be a resistance. Touch that level and then start to reject, but that would give you a higher high, so then you would expect the higher low. So really not a change in the thesis from what we saw on the other levels. Just understand this 2850 level is a key level, and we didn't quite touch it this week. Moving over to the Mag 7, Mag 7 had a decent week. We're kind of in the same consolidation range with the same highs that we've been seeing really since the beginning of December. 9 December week, same high. Current week, also still the same high. So really no changes there. Momentum continues to fade. RSI still showing that divergence here with a lower strength and the same weekly high. We did get through this trend line here. We thought we might see a little bit of continuation, which we did, and it's certainly possible that we push through this week, but otherwise we're in consolidation until we see that breakout above these levels and a push to the trend here around that 345 area. Moving over to Apple and Microsoft, both of these had a interesting week. You can see Apple was down 3% right to the trend line here. Is the trend going to hold? Maybe. That's 4 weeks in a row of bearish. We're back into this consolidation range. We're right at the trend. Next level is going to be 217, upper level 224. If it can break higher, good to go. Could be looking for a gap down, gap up, maybe look for that gap fill. It's been a pretty big sell. We've round tripped this entire move here. At best, you're neutral. Honestly, probably a little bit bearish, headed towards that 55 down at 209.74 potentially. Momentum bearish, RSI bearish. And then looking at Microsoft, interesting. So we did come back and test that 55 EMA. We've been waiting for this to consolidate for a long time, and now we're pretty consolidated. Had the catalyst of the $500 billion investment in AI with OpenAI participating in that, and then Microsoft got a huge bump off of that, so 3.5% higher. Current support for 40, technically above the trend line for me. You could argue you're probably right on it realistically. Still looks like consolidation, but I could absolutely see why you're looking for a breakout, retest, continuation. And if this is a true continuation through the trend here, you should be looking for a push back to that all-time high. It does look decent there. If it rejects from here and we pull back into this range here, I would be looking for a break of this 55 at this point. We've been waiting for it to consolidate really since back here in February of last year, and we are still here in January of this year, and now we're starting to move a little bit higher. Can that catalyst continue to carry it? I think that remains to be seen. Moving over to Tesla and NVIDIA. Tesla down 4.5% or so. It's right at the trend, still hasn't broken. Momentum still fading. RSI breaking below the SMA. Price is king, still hasn't broken the trend, still in the same consolidation since the beginning of December, just like seemingly everything else at this point. NVIDIA, it's actually been here since mid-October. We are still here in mid-January, through another wick, through another rejection. NVIDIA also participating in that catalyst with Microsoft, so it was up 3.5%. Still couldn't get to the all-time high, and then still rejected on the Friday, so doesn't look great to me. Seems like another wick test of these all-time highs. Waiting for this consolidation a little bit more. Once that 21 EMA breaks, I think we're headed back to the 55, down in the 111, 112 area. Moving over to Amazon and Alphabet. You got Amazon breaking out above the all-time high there. 4% move, just about. Momentum back to bullish, RSI back to bullish. One of the best charts here out of the Mag 7, looking very, very good. And then looking at Alphabet, push to the trend, touch the trend. It did have a pretty strong close above all of these bodies here, so got the strong week the previous week, continuation to the trend there. Momentum still bullish. RSI, I could see why you might be a little bit bullish, but it's still extended. You can see this trend structure in here has been major resistance for multiple iterations now. Is it going to reject from there one more time? Potentially, but if it breaks out of there, I think it's going to be pretty aggressive. This is a new record close here for Alphabet, but definitely some overhead resistance that it has been struggling with since mid-December, just like everything else. Moving over to Meta and Broadcom. Meta having the best week actually at 5.67%. New all-time high close. Broke through the trend here on the weekly. Everything looking very, very strong there. Meta has been on a run. Looks very good. And this week was no exception to that. And then you got Broadcom managing a 3% gain as well. Looks like a new record close there. Not a new record wick though. That's still back here on 16 December. But looks like we're continuing up potentially to this trend structure here around 264. Moving over to staples and discretionary. Staples having a good week, pushing towards that trend and the 55 EMA. Momentum stepping to bullish for the first time in a while. RSI still very depressed there, still not above the SMA, but overall, Little bit of dead cat bounce potentially. And then looking at discretionaries, slightly positive 0.34. We had a little bit of a flip to risk off on the Friday. We'll see if that carries through into the Monday. But for now, it looks like we're seeing still a little bit of risk off with staples outperforming about 0.5%. Momentum fading, RSI still overbought there. Still looking at a high, lower high potentially on discretionaries. Needs to get back below the trend if it's going to do it. Otherwise, we're still sitting on the trend. Moving over to wood and oil, you can see wood has had two very strong weeks. A little bit of volume coming through here on 6 January. We talked about that. And since then, it's been straight up price action. Seems like somebody's buying the economy, buying up wood for potential growth. We'll see if this continues to go here, but it's been absolutely massive on the futures. And then looking at oil, big pullback there, drill baby drill coming out of the White House. And with that, it seems like price is selling off here about 3.5%. You could argue that it was already overbought, up 4 weeks in a row, big wick rejection at the 200, pull back. Based on this, you would look for a pullback here to the 21 EMA at 71. If it holds the 21, you get a higher low setup. That would be an absolutely super amazing setup for me. I love to see it where you get a huge breakout above the 21, wick rejection, retest 21, hold that as a consolidation support, and then you get a continuation higher. Those are usually very good high probability trades if that 21 EMA holds. Moving over to breadth, this has not really changed here over the last week. 20-day breadth hovering in that pretty much overbought condition. It can hang out here for a couple of weeks. Not expecting anything crazy yet. We did just get here, so expecting that to kind of hover in the area, and then 50-day continuing to trend up. Big gap, big rally, momentum still going. RSI is still bullish. Everything says breadth should go higher, at least in the short term. Similarly here on 200-day breadth, looking for this to kind of continue just a little bit more into the maybe 65 area. Retest some of these. The trend is here. The 21 EMA is here. We are right at the SMA. If it's going to reject, it would be interesting to see it do it here. Get one more retest. Higher low setup on the strength, and then potentially rally out of there. That would be interesting, but for now, we did get another up week, got a doji, which is a candle of indecision, and it could absolutely go either way. We're testing the 9 EMA right there, closed basically on top of it. If we get a pause, continuation, like I said, 65 is the target. If it does reject from here, look for the higher low setup on the RSI, want to see the momentum hold, and then we would look for that bigger continuation. Moving over to bonds just for a moment, you can see bonds have finally slowed down a little bit. They did go pretty negative on the week, and then they did rally out of that just a little bit, but still stayed negative. Momentum is fading, RSI is kind of flattening here. Finally, these have slowed down, and those have allowed markets to rally over the last couple of weeks as yields hovered at least for really 3 to 4 weeks at this point. So good to see that. Momentum fading, like I said. I think these will just continue to hover through FOMC since we're very likely to get a pause in my opinion. But either way, about a half. It's good to see that these have cooled off a little. Moving over to the dollar, finally got a big sell-off candle here on the dollar. You like to see it, 1.7%. Momentum fading, RSI breaking down below the SMA. Again, potentially a setup here where you come down to the 21 and here around 105.2, 105.5, somewhere in there. Retest these levels, get a continuation higher, maybe a double top or lower high setup, and then a continuation lower into this zone, back down to the 200 potentially. We'll see how it plays out. Right now, big rejection candle. You would expect at least a second week continuation in my opinion. In terms of levels, you got 106.8 as your first support. If that breaks, like I said, 105.5 is the level. Moving over to bonds. Bonds also had a pretty decent week, 0.37 to the upside, getting back above the level, 96.51 on J&K. TLT was basically unchanged, gapped higher, and then finished basically flat, just 3 cents to the upside. Momentum still good here. I still think we have a nice touch, nice bounce off of that 85.90 level, which is technically still a higher low from here. So you could argue we're probably okay, at least in the short term. Still looking for some rallies out of here. Want to see a little bit more conviction to the upside. So far, we haven't seen it. Momentum says should happen. RSI still needs to break above the SMA. Maybe we see a double bottom in here potentially, then continuation. But either way, I think we are in a bottoming formation, and this is an opportunity for me. Moving over to volatility. Volatility was negative on the week. Makes sense. Still sitting here at that 14.7 level. We were here for a couple of days in a row, still testing that level, still slightly elevated, momentum still bearish, RSI still bearish, waiting to see if it sells from here, but for now, we're still holding support, we're below the trend, kind of neutral. Moving over to my accounts, you can see I was down about 400 on the week, nothing crazy. I was probably trading too much, usually I do okay in flat markets, and I was definitely trying to get in and out of things, looking for some moves, and we just really didn't get the kind of movement I thought we might. And then we ended up flat most of the week, and that was not so good based on how I was trying to trade. So a little bit of live and learn, and then I didn't want to hold any positions here because of how extended we are, plus how much we were seeing consolidation into the end of the week, and then we got that sell into the Friday. So based off all of that, I think we're going to have a better opportunity to get in at a little bit cheaper prices. Waiting to see where that looks like. Might trade a little bit short on a daily basis, but not looking to stay short for any length of time. Overall, the trend is still very much bullish on the weekly charts, but in the short term, extended consolidation, looking for some pullbacks. Let me know down in the comments section what you think of the interest rate environment around the world with the ECB cutting and the Bank of Japan raising rates as we head into this FOMC week. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.